Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning pre-market webcast. Okay, let's start off on a daily chart. And when we spoke yesterday, we talked about how we had the compression. We're in the lower band ride, and the bulls. We had the hard move down from 26.50 into that 25.86 low. The bulls needed to defend, get back inside the Bollinger Bands, ideally close above the lower band. They did that. The other thing they did was they took out the weekly pivot. We talked yesterday morning about how it was very likely the weekly pivot was going to get a test. It did get a test, and they were able to close above it, get back inside the bands, and now we traded as high as 79 overnight. So it was one of those days where we spent the morning. There was a high. We walked through it in the wrap up. Here's the hourly chart. So here's your 200-day test from Friday. We were long the close Friday. We covered 40 handles or so. There was some follow through first thing in the morning, but it kind of stalled out in the in the 30 to 33 area when it couldn't convert 26.31, which was our proprietary moving average, and in the 5-minute mid band. That got us that got us short for a little bit, and then we shorted 24 for a really nice move. But as we got into the afternoon, the higher low stuck down in the 26.02 area, and that created some long opportunities. We ended up long 24s a couple times. We ended up long 45. We were long 53 overnight. So it's been a good tape. It's yielded runners of 20 handles, 17.5, 14, 13, 20, 40 from Friday. So the volatility is still there, and with everything that's going on, I think it's going to stay. So where does that leave us now? As we come up into 80, we got to deal with the 100-day exponential moving average at about 82. We remain in sell rallies mode. You've got the middle band up at 27.17. We could rally as high as there, fail, and still be in a sell rallies environment. I took profits. We closed out our 53 long at 73 just because I kind of like to start the day fresh, and we got as much out of that as we really could. We're knocking around here in the lower 70s. If the bulls can convert 82, then that opens up a move back to the monthly pivot, 26.99.5 on the June contract, 95 on the continuation contract. We had some struggles with that back on Thursday. They weren't able to get back up and over, and that started the first move down last week. So if they were able to get up into that area, how price reacted to that would be important. On the way down, if they say they pull the plug here, say 79 is the end of the road, well, then what's going to be important is the hourly midband, the weekly pivot, obviously. We are now as much as 30 handles over the weekly pivot, so you can see how much damage can be done when that weekly pivot converts. So we've gone from a situation where we were in here yesterday morning saying, I think it's going to get tested. It's pretty likely it gets tested, to now it's converted. Now it is 30 handles above price, and any serious push down to that area is most likely to result in support, unless the bears really perform. And you know what? It's an environment where the bears have performed at times. So I'm not going to dismiss that out of hand like I would have, last year or basically, anytime you've been in a really strong uptrend. The moves to weekly pivot in that environment were gifts, and they were always dips to be bought. So the way I'm going to approach the open today is to take a really hard look at 70 to 73, see if it wants to continue to hold up. If it does, pretty likely we get long and look for 82 or beyond. If it converts, then that's an area I want to short against for a look at, at the hourly mid-band there at 61, or maybe as deep as the weekly pivot. So we'll see. I don't think the bears are going to go quietly. I think that there's plenty for them to be bearish about. And, these kind of pops in this kind of environment are ripe to be sold. Where you can get yourself into serious trouble, and what we avoid in the room is you can get yourself into serious trouble fighting these pops because you want to be short, rather than being short when you should and then riding the wave higher. 52 handles later from yesterday, it was all about being in tune with the flow. The morning was about being short, the afternoon was about being long, and you have to be flexible. You can't be dogmatic. You can't have you can't have an agenda, or you can't be an ideologue about, well, there's so much going on in the world, we have to go down. We don't have to do anything. Okay, follow price, follow risk, and it'll take you in the direction that you need to be at any particular time. If you want to see how that works, come and see us. We would love to meet you. Great group of people. And I'll be out with a midday, and we'll do a wrap-up. Take care, trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.